So the first question of the week is, what is the best way to get income from for retirement?
Best way to get income for retirement. Yeah, okay. When we look at retirement, there's a lot of things besides income. There's a lot of things besides finances that are really important. Your health and your family and just your enjoyment as a whole, your satisfaction with your retirement. But in terms of finance, when we're looking at all the different financial aspects of it, obviously income, I think it's probably number one. And it has that ability to kind of, make your retirement more successful and more satisfying if you have enough income. I would answer this question though first by just a discussion about expenses because I think it's super important. If your expenses are so high that no matter what you do with the income side, you can't meet those, you're going to have some troubles and you're going to have a very dissatisfying retirement. And so the first thing that I would notice within my clientele, and I think this is one of the advantages that I have. I've been doing this for 35 years. I've done over 6,000 financial plans. And even more importantly, I can work, let's say, an 80-year-old, and I'm able to look back over their whole life path and talk to them about what they did. And I can compare an 80-year-old that's been very successful with an 80-year-old that hasn't been very successful. And I've noticed some differences. And so that's what I'll try to talk about. So first of all, in the expense side, those retirees that are doing very, very well, they're spending less money than they could spend. And that's true at any age, right? I mean, that's one of the key aspects is to be able to save and continue to save. So let's just say, for example, we have a client who could spend 100,000 a year. Well, and they're spending 70,000 a year. And that's a really big deal. So they have this extra money that they could be spending each year. And what that does is it gives you room for emergencies, house maintenance things that happened. I just had my house blow up because of a leak inside the wall and wiped out a bunch of hardwood floor and what have you. So very expensive to fix all of this. Or if you have kids, anything can happen with the kids no matter what age they are, and you want to have money for that. Or if you have dental issues or vision issues or hearing aids, all of these things are things that aren't often counted in somebody's overall budget. There are things that happen on an occasional basis. And so that's number one. Spend less than you could at any point in time in your life, especially in retirement, and that will help. But then if we break that down just one more step, of that, say, $70,000 that hypothetical person's spending, if you can reduce the amount that is fixed versus variable, that's a huge deal because it just gives you massive flexibility. So let's say, for example, we have one person whose fixed expenses are about 50,000, right? Versus the 70,000 that they're spending. And another person whose fixed expenses are 20,000. The person with the lower fixed expenses has way more room for error. And when things fall apart, they can cut back easier. So fixed expenses are those things, the next time the market drops 60% and you take a look at all of your expenses, those things that you can't get rid of very easily, those are fixed expenses. And the biggest ones are mortgage payments, car payments, those types of things. So most of my very successful clients have no debt. Now, some have a little, but it's very little. Most have no debt and they've paid off their house. So that's something to try to achieve in retirement. It just gives you flexibility so that if you have to reduce from 70 down to 50, you can do that and just go back to share.
It should work. Yeah. Um,
All right, sorry about that. We're back. We had some technical difficulties. This is truly a live show. We've had a few issues over the time we've been doing this. So hopefully that solves some of the problems here, and we'll just keep going. I was mentioning that again, a retirement that's very successful is one where you're spending less than you could spend, and of those expenditures, you've reduced the fixed expenditures that are very hard to get rid of as much as possible for the rest of your retirement. And so once that's achieved, then it's a matter of generating income to kind of accomplish that. So let me share my screen here so I can show you. This is a thing I call the retirement income builder. And so these are just a whole bunch of different places that you could generate income, for your retirement as far as that goes. And so, we've got stock and bond investments. We have savings and CDs, annuities, alternative investments, Social Security, pensions. I'll get back to those because those are important. And maybe you have rental income, or maybe you have second or first mortgages, investments that you've made where people are paying you, the money back. Maybe you use your home equity. You can do that by maybe moving to a smaller home at some point, or you might continue working for a while as a part-time job or consulting or little business that gets started. I have a lot of clients doing this now, that more than they used to. Retirement's become kind of this fluid thing where people just want to be able to shift to something they really want to do. So if I look at this, the two things that really jump out at me are the Social Security and pensions for starters, because again, my most successful clients have low fixed cost, but they have high fixed income. So I would call these kind of fixed incomes. And it's money coming in from an outside source that doesn't rely upon a renter or the stock and bond market or interest rates at the bank. And what happens and why this is so important, you really want to maximize your Social Security and your pensions. And this is essentially a math problem to figure out how to maximize those. We use financial planning programs with Monte Carlo simulation to figure out the optimal age to take Social Security and the optimal choices to make for pension distribution. So that's very, very important component. Again, my happiest clients, the ones that are the most relaxed, are the ones that have the most money coming in here and have very little fixed expenses. So it just gives them tons of flexibility. But your distribution from these other areas, assuming that these two, pension and Social Security, don't meet everything you need, really you have to take a look at, should I have rental income? Should I be investing there? If you already have that, great, but do you want to add to that? Should you be taking money from stocks and bonds? Should you take money from IRAs first or from your non-IRAs first? And so what we call the sequence of withdrawal from the rest of these is incredibly important, and it really makes a big difference. It's one of the things that we kind of figure out in the financial planning process as to where to get the income from these. But you should have a fairly robust system of income potential. And that is really, having a lot of these different circles filled in so that you have something to fall back on in case one circle doesn't work. Having everything you own in any one of these circles could work if it happens to be a great circle, but it also has that risk of really being an issue with lack of diversification. So diversify your income sources as much as possible is what I'd recommend.
So if I like, for me, I don't really have an option of pension, and pension's kind of falling off with my generation. Is like, what's a good way to fix it? Because right now, if I'm my options are 401ks and IRAs, which are kind of dependent on the market. Is there any way I can get that fixed income? Do I turn to annuities?
Yeah, that's exactly what you do for most pensions are farmed off to an annuity company. Some of the big ones aren't, but a lot of them are. And so the company will accumulate a certain amount of money and then give that to an insurance company to produce an income for life. So you could make a pretty good argument for, using what's called an immediate annuity. They're fairly efficient where you would accumulate some assets and then turn it into an immediate income that comes out for the rest of your life, maybe the rest of your spouse's life. You got all these different options as to how you do that. I, look at that personally, and that's one of the things that I plan on doing. Again, I have sat across the table from thousands and thousands of people and watched, what's happening in their retirement. And I'll tell you what, the people that have lots of money coming in here in this fixed income area are very, very pleased and very happy. Now, the problem is it just kind of depends. You can't put, if you don't have that much money outside of, say, Social Security, then you probably don't want to do an immediate annuity and wipe out all of your liquidity in these other places. So, this would be something where I'd be looking at more like a 10% or something less than that in this area just to generate, an income for life. And so, again, if you don't have tons of money, that's probably not worth it. So the value of your entire, asset growth has a factor in this. But yeah, that's one of the ways to take a look at that. And obviously I like the stock and bond investment area. So another way to kind of make sure that you've got at least some security there is to have more in the bond market. If you have 60% in stocks and 40% in bonds, a bad bond market isn't nearly as bad as a bad stock market. So that at least gives you some security for a chunk of your assets that'll be there, more likely for the long term. So, that's a good question though, and it's an interesting area. Again, it depends on how much assets you have as to what you can really do. I mean, if you don't have enough assets to buy a home to create a rental income, that's not an option, for example. But so it depends.
So what are your thoughts on, reverse mortgages and using home equity as kind of a to make a kind of a fixed income too?
Yeah, home equity comes out in two ways that I've seen. Number one, and we currently have licenses or clients in 26 states outside of California because people have taken their, basically high value home here and sold it and moved someplace else that's cheaper. And then, so they sell something for $1.5 million and buy something for 500,000. And that extra $1 million, after tax goes into really kind of their stock and bond investments, which can then generate income, right? So that's one way of doing it, is to actually move. And a lot of people have done that. The other way, if you don't want to move, is this concept of the reverse mortgage. Now, the problem with the reverse mortgage is that they're not the best deal when you really dig into them. They've gotten better. They used to be really bad. You really want to use that as sort of a last resort. So when all of these other things are exhausted and you don't have enough money to really make some of these other things work, and you're sitting on, $1.5 million worth of equity in your home, so basically you're home poor and you really don't want to move, then a reverse mortgage is probably your best option in that particular regard. And there's different ways to do that. You can kind of do a quasi reverse mortgage by just getting an equity credit line and withdrawing, small amounts per month to live off of. And there's a whole bunch of different ways to do that. But nonetheless, yeah, that is an option. But it would probably be the last thing on my list, once all these other things weren't enough. I would be looking at that. Again, only if I didn't want to move, which happens actually quite a bit.